Hi there, and welcome to the latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Prime Minister John Key's been hot to trot, selling New Zealand to Asia this week and cashing in with our first agricultural deal following the free trade agreement with China. But here at home, what's happened to the Chinese bid to buy up the Crayford farms? Billionaire foreigners from 24 countries have already bought into more than 154,000 hectares of farmland in the past 5 years. Is New Zealand up for sale to anyone? Can we pick and choose? Really? And fixed versus floating short-term rates are up thanks to the official cash rate hike. But are we paying the price on long-term fixed rates because of the European debt crisis? And what's happening with those European bank stress tests anyways? But first up, shares were positive over the past 7 days, with U.S. and European markets having their strongest week for the past 12 months. Here's ASB's Nick Tuffley to tell us how come. Hey, Nick, good to see ya. So what's up? What's happening?
Well, just as we spent most of May and June navel-gazing, thinking that the world was going to end, markets have now turned around and there's a lot more positive sentiment out there, and that's certainly helped the equity markets. And there has been a little bit of substance behind it. We have seen in Europe some good industrial production figures, for example, some promising signs in the retail sector in the US. Even Greece has managed to actually sell some debt on its own behalf as well. So the events like that have contributed to a better sentiment, and in that sort of environment where people are prepared to take more risk, we've seen our currency lift up a little bit as well.
And how's the New Zealand dollar doing against that good old greenback? Up 2.5 cents in the past week. Yes,
well, we're now almost knocking on the door of 72 cents, so it has been quite a recovery. So it is that theme of that risk behaviour. You're seeing money going out of the safe havens into the places where it might get more of a return. And the Australian economy registered a whopping 46,000 people employed in the recent month, and that's also pushed up the Australian dollar, and we've gone along for the ride.
Now, you're just back from France yourself. How are we doing against the euro?
We're a little bit higher. It was quite amazing. I was able to track. I was there in May when everything was going to custard, so I was able to track quite accurately with my Visa bill the currency gyrations.
I'm sure.
But when you're over there, you just get the sense that things are just chugging along. Always difficult to tell when you land yourself in an unfamiliar country.
And how are we doing against the pound, Nick?
We have been relatively firm, so we're still going to be holding up there. We have seen the pound itself start to strengthen a little bit more recently on some inflation concerns, but I think the reality is against the euro and the pound, we're going to remain quite firm around the recent levels for some time.
Let's talk equity markets. U.S. spending is up. This is good. What's that mean for the farmers here at home?
What we've seen is some reasonable retail sales surveys coming out, and it's given a little bit more confidence that the US are actually spending a little bit. Ultimately, what we want is people in the US to be going out buying more burgers, really. So that's what we really need, the sales that we really need to see increasing.
It's funny, I just talked to my brother-in-law in Canada, works for a big firm called Cardinal Meats, and he was saying there's lots of New Zealand meat on the premises there. They're turning it into burgers. Yeah,
that's where the majority of our meat to the US goes. So we get that part of the market, and we've been less exposed to those people saving their pennies on some of the steaks.
Here at home, let's talk dairy. How are the butter prices doing?
They've been pretty firm. Whilst we've actually seen milk powder prices in particular weaken over the last month or so, the butter prices and casein prices have held in very, very firm. So what we're seeing is there's, I guess, what is known as a fat deficit. Who would have thought the world could have a fat deficit? But a lot of those sort of high fat content products are quite sought after, particularly by India, where they don't have many oils of their own.
Apparently over in Europe, with everybody watching their wallets too, they're not buying dairy products. They're looking for cheaper substitutes. Is that something we should be concerned about?
It's always one of those things, particularly when prices are quite high. I think the risks of that happening are a little bit less, say, than when the dairy prices were very, very high during that boom. But obviously, people are going to be watching their pennies pretty closely with all the fiscal restraint that's going on in Europe.
Overall, looking ahead for the next few weeks, can we expect, as dairy farmers, for example, to see more volatile markets?
I think the reality with commodity markets is that the volatility is always there. Hopefully we'll see it die down a little bit and won't see the sort of volatility that we get in some of the harder commodities. But we do seem to have come off a period where a little bit earlier on this year we saw a lot of people who would be purchasing the dairy products, the people who are turning it into other foodstuffs, being a little bit worried about making sure that they were covered for their longer term needs. So some of that, I guess, demand maybe have died away and explain why prices have settled down a little bit.
Yeah, the whole milk prices seem to be firm, but apparently stocks are low.
Yes, I think the whole milk prices, it's part of that story of the fattier products seeming to do well, whilst in contrast the skim milk powder, there's still quite a few stockpiles, particularly in Europe. Also, we're one of the big suppliers of the sort of whole milk powder, and we're obviously in that sort of quieter part of our season here.
Let's go to the US now and the beef sector. Still subdued over there?
Yes, we've recently gone through that period where the Independence Day holiday, a short week, so that's meant fairly quiet market, and it is a bit of a quieter time for the year over there. So things looking subdued at the moment.
With the demand still down for beef in the US, how is that going to affect prices for our boys and girls here at home?
What we have seen is that the prices in US dollars have softened a little bit, so it's still pretty quiet there. And of course, we've had the New Zealand dollar strengthening against the US dollar a bit. So since late June, we have seen prices here weaken off a little bit.
And global wheat markets, how are they doing? Apparently there's been too much rain in parts of the globe, droughts in the other. That's really playing havoc, isn't it, with the prices?
Yes, and there have been some other factors whipsawing it around. So news out of the US was suggesting that the amount of area that's been taken over for the planting of things like wheat was being quite small, so that spiked the prices up. And then the same outfit came out and essentially said that, well, actually the yields are really good, so there's going to be a bit of a supply overhang later on in the season. So we've seen prices fall back on that.
So, Nick, as we wrap up this segment, just tell me, what's your top 2 tips for farmers listening in to this program now? What should they be on the alert for over the coming 7 days?
Well, the big things I think we've got to keep an eye out is, one, those currencies, and just checking what's happening in the European sense. And I'd look a little bit longer term to what's happening with the European stress testing as well for an indication of what could happen with the currency markets. Meanwhile, look, parts of the globe are doing pretty well. The fortunate thing for us is that we are pretty well exposed to Asia, and I think that's the area where, longer term our success is going to be coming from. Okay, next up we talk to Murray Weatherston, financial planner with Financial Focus, who joins our panel to talk business headlines from around the world affecting us here on the green grass of home. Stay with us.